joined today by Steve Brown, CEO of Orcadian Energy. Thanks for joining me again, Steve.
Always a pleasure, Darren. Always a pleasure.
So, Steve, turbulent times. Perhaps before we talk about Orcadian, we can talk about the situation unfolding in the Middle East and what that could mean for oil longer term. What's your thoughts there?
Turbulence, the word, a bit of a shock. The scale of what's happening there. I think virtually every commentator who talks about potential war in the Gulf and so on and so forth, they said, oh, but the Straits of Hormuz, or the Strait of Hormuz, it's a singular, I didn't know that, but
All right.
the Strait of Hormuz, you can't block that. The Iranians can't block that. Well, it turns out if you don't have insurance, you don't go through it. So the insurance companies have ended up blocking that. And something like 15% of the world's oil supply goes past the Strait of Hormuz. So cutting off 15% of supply is going to have a big impact. How long this goes on for, nobody knows, right? Not even Donald knows how long it's going to go on for because events, dear boy, events. So all of a sudden, we've all realized energy security matters. You know, our own energy departments, their title is the Department of Energy Security and Net Zero. And they've been so obsessed with net zero, they've forgotten about energy security. And the truth is, you don't get energy security without oil and gas. And 2024, about three quarters of our energy supply came from oil and gas. There's a lot more of our electricity supply comes from wind and solar, but electricity only makes up about 20% of our energy usage in the country. A lot of people don't realize that. So oil and gas makes up 75% of our energy. And by closing the Strait of Hormuz, or by the Strait of Hormuz being closed, that's 15% of oil, and it's about the same percentage of LNG that's traded because Qatar has shut down their LNG plant. So everyone's looking around going, whose job was energy security? I'm pretty sure it was your job. I think it was yours, Darren. I think it was yours. Certainly wasn't mine, right?
Yeah.
So everyone's in a paddy about energy security, and that'll be the long-term impact of this. There's going to be a near-term impact where pump prices go up, oil price goes up, gas price goes up. People are saying we should double the windfall tax, whatever. I don't know.
Yeah.
There'll be a short-term discombobulation, and there'll be a medium-term correction of undersupplied strategic petroleum reserves and so on and so forth. But the long term is people will be thinking about energy security as they're designing energy policy. And what I'm hoping is people realize that, it's great to have some wind turbines out there. It's cost us a lot of money to have those wind turbines out there. I did a little bit of research before I came on the call. The UK spent about 115 billion pounds on renewables so far. So let's do that on a per taxpayer basis. That's £3,000 each taxpayer is paid. Yeah. So I don't know if you feel you've got value for money. We've got pretty much the highest electricity prices in Europe and in the Western world. And we haven't got any energy security because the wind doesn't blow when the war's on. The wind blows and stops blowing when it feels like it. And one way to think about wind power, actually not a bad way to think about wind power, is it's a fuel saver. Because you have to have the gas backup for when the wind doesn't blow. So when the wind blows, you're saving the fuel that you'd otherwise have to put into those gas turbines. And you can't run the economy purely on wind and solar. It's not feasible. The costs are absolutely prohibitive. You can run the economy on gas and use wind when it's there and you have to pay a lot more to the people who are running the gas power stations because a lot of the time they're not going to be running. But you can think of wind as a fuel saver and an extender of our reserves. That's not a bad way to think about it.
Hmm.
But I believe longer term, there'll be a shift in perception about energy security and a realization that energy security, at least for the next 20 years, we've been at this for nearly since 1997 in Kyoto, nearly 30 years. We've been at this transition business. It's not happening overnight. It's not happened
No.
after the expenditure of 115 billion pounds in nearly 25 years of investment. You can't transition to a pure wind and solar environment. Energy security comes from having your own oil and gas.
Yeah.
And we need a recalibration of the government's relationship with oil and gas companies. We're not just a milk cow to milk for taxes. We're actually the people who are providing the energy security for the whole country.
Well, that leads me on to talking about the North Sea then. Obviously, where
Yeah.
Orcadian have their majority of licenses, there's a lot of debate now about the government relaxing or ending the energy profits levy. Sooner rather than later, perhaps as early as 2027. Where do you see that current situation?
Well, so that's a very interesting situation. And I, so there's actually a little bit of history that's worth going through on the energy profits levy. So I think it was first introduced by Rishi Sunak in November 22. Um, and when he introduced it, it was going to be for 3 years and it was going to be for 25%. And there were actually really meaningful incentives to invest now.
Hmm.
And to be perfectly honest, at the time it was introduced, gas prices were crazy. Oil prices were pretty high, but gas prices were crazy. Everyone's having to pay their gas bills. The companies who were producing gas were making money hand over fist. It wasn't an unfair tax at that point. The person who made it an unfair tax and who I blame for an awful lot of what's gone wrong in the North Sea is Jeremy Hunt,
Yeah.
right? So he increased the rate to 35%, he extended the life, and he reduced the allowances. And then he did it again in another budget. He extended it a bit further. And uh, Rachel Reeves made it even worse. She added 3% to it. She added on another year. They turned what was a bit crudely constructed, but actually not an unreasonable tax into something that was just punitive, just to punish oil and gas companies for being oil and gas companies. So the history on that EPL is actually the transition from not an unreasonable structure to a completely unreasonable and punitive structure. And the industry's been calling for EPL to go and to be replaced on an earlier than the current date by the oil and gas price mechanism. So actually, in November of last year, there was great news for the industry. It didn't really get trumpeted very much, but we went from a position before Rachel Reeves stood up for her budget speech, during which she never mentioned oil and gas because it doesn't matter to her, right? She never mentioned it. But before it, we had no idea what the tax rate was going to be on any of our projects.
Hmm.
We knew what it was up until 2030. We had no idea what it was going to be after that. And what actually happened was at the same time as she was speaking, the Treasury was releasing documents that detailed what the new tax was going to be. And the new tax is a fair and reasonable windfall tax. So come 2030, end of first quarter 2030, EPL is gone, right? That's baked in already.
Hmm.
And from that point onwards, you pay a tax on prices for oil above $90 a barrel and for gas above 90 pence a third. let you into a secret. Nobody in the oil and gas business runs their economics at $90 a barrel. They're testing out 70, 60, 50, maybe even 40, right? Nobody worries about that upside case where we have $90 a barrel. And here's the thing. It's only if you go to $100 a barrel that you'll pay more tax. And the tax will only be 3.5% because it's 35% of the increment above 90. So it's actually a pretty reasonable tax structure that allows the government to capture some upside in a price spike, but it doesn't dissuade people from taking investment decisions. The Treasury did a masterful job of digging their political masters out of the hole they dug for themselves, right?
Yeah.
So Treasury did a great job, and the industry since that announcement has been saying, switch to this new mechanism earlier, switch to this new mechanism earlier.
Yeah.
The trouble is there's been a lot of wishful thinking. Because wouldn't it be nice if your tax rate went down from 78% to 40%? I mean, obviously, we're oil and gas people. We know we have to pay higher taxes than anyone else on the planet. But, going down from 78%.
Within reason.
Yeah. I mean, at 78%, you get to keep 22% of the profit. That's not a lot.
No.
And no wonder nobody wants to invest in the North Sea right now, because they don't want their projects to come on stream when the EPL's in place. Because why would you want to only have 22% of the profit when you could wait a year and have 60% of the profit?
But there are signs that this is potentially changing, right? There is active discussions now about this.
Yes, well, I understand they are. I think so. So I hear, right? So I don't know if this is true or not. That Reeves was convinced of an early transition to OGPM, oil and gas price mechanism, this new tax, and was going to announce it. But then the war in the Middle East flew up, and prices are going through the roof. And that is not the time to be announcing you're taking a windfall tax away. No. So I think that opportunity got missed. We're in this crazy situation where I think Harbour have deferred $2 billion of spend or some big number like that.
I saw that as well. Yeah, it's $2 billion. Yeah, of North Sea investment.
So, and what they're doing is they're saying, well, if I spend the money now, then I'll be paying tax and I'll only get 22% of the revenue. If I wait a while, then I'll spend that same money and get 60% of the revenue. Oh, which one shall I do? It's not complicated. So that transition date, it's fine for it to be in the future, but really only ought to be 2 years in the future. So maybe a transition in 28 or 29, not all the way to 30. Because you want people to be incentivized to say, oh, crikey, right, I want to be getting a field coming on stream in second quarter 2029, 2028. And to get the full, the country gets the benefit, the oil companies get the benefit, and there's still a mechanism if something else bad happens. There's enough bad stuff happening in the world. We don't need any more bad stuff.
And the mobilisation of these things, can take a year or two anyway, can't they?
Oh,
so
it takes,
if we get clarity, it could be all of a sudden that North Sea's back in focus again. So it'll be interesting to see.
So maybe I'm always an optimist, right? How else could I do this job if I wasn't an optimist?
Well, no.
But I do think companies are going to turn around and say, we need to be investing in the North Sea, investing in new projects. And one of the characteristics of all the companies that are left in the North Sea, so there's been a real changing of the guard in the North Sea. It used to be there were the majors, and then there were some American independents, some Canadian independents, and a few British independents. The majors have all pretty much gone. So ExxonMobil is nearly gone. They still got a bunch of assets in the southern North Sea that they were trying to sell. Didn't manage to close the deal, but these things happen. Chevron has almost entirely gone. They've got a little bit of Clare left, the Clare field, nice big field, but they've just got one asset left. Um, Shell have combined their operations with Equinor's to form a new company called Adura, this strategic alliance. Actually, quite an interesting company. And uh, BP are one of the few majors that have assets here in their own right. Total have merged all their assets into Neonext. So we have all these new companies. We have Neonext, which is now the biggest, Neonext Plus. They keep changing their name. They keep adding
Mm.
something else onto it, but which is the combination of what used to be Neo with Repsol and Total. So bringing three companies together, they're now the biggest producer in the North Sea. We've got Harbour, we've got Ithaca, we've got Serica. It's a complete changing of the guard. And my perception of these companies is actually a lot of them are formed out of the operating teams of the big companies.
Mm.
And there's not so much attention being paid to development projects. And what we've quietly been doing is amassing a portfolio of development projects.
Mm.
And if one of those big companies suddenly wanted a lot of barrels to bring into development, I'll tell them my phone number,
Yeah.
right? Just
Well,
just dial 07850 793 641. I'm on the case.
well, we haven't actually since I last spoke to you. It's been quite a while actually, and you have been sort of accumulating. I've noticed in various news articles. You've been accumulating and increasing your licenses in the North Sea.
Yeah.
Perhaps for when that time comes.
Yes.
Can you just give us a quick overview of that portfolio?
Yeah. Yeah. So let me just run through our asset portfolio. And
Yeah.
for me, the operative word is portfolio. So, I've been working on development projects for a very long time. Uh, and one of the things that's striking is that, sometimes projects look as if they're real goers and then they run into some hurdle and they slow down and so on. And sometimes ones that had run into a hurdle jump it and clear it, and maybe that's the one that flies. So you're
Mm.
never quite sure, when you're managing that portfolio, you're never quite sure which one is going to be the one that really takes off. The the one that I think is most likely to take off in the near term is the pilot project.
Mm.
So we've managed to sign a farm out deal with Ping Petroleum. They they have 81.25% in the field. We have 18.75% in the field, but they pay all the costs up to first production.
Wow. Right.
Right. So, uh, and it's likely they might bring another partner into the project, but it is really one of the most interesting projects in the North Sea. It's a viscous oil, a heavy oil, and we're planning a polymer flood on it. Uh, and we can see that polymer flood is absolutely the best technology here. It's really well proven on the Captain field, which is operated by Ithaca, and that's been a great success. That project, we're very confident pilot will be a great success, and Ping's a great partner to have helping us move that project forward. We have a license to the south of that that's got another 50 million barrels of reserves on it. We've got that 100% at the moment. We're likely going to farm out at some point to move that project forward because, the simple reality is the oil business runs on money. And if you don't have money, you can't do very much. So we need to find partners that bring money to that. We have another viscous oil project. It's called Finn Bewley. The Bewley is the formation it's in.
Right.
That's why it's a double-barreled name, double-barreled oil field, right? And that is really viscous oil. So pilot is around about 160 up to about 800, 900 centipoise. But I translate centipoise into units people understand. So it's kind of ranges between olive oil and engine oil, right?
Right.
LK is kind of like a light engine oil. That's 300 centipoise. Fin is 5,000 centipoise. So this is getting a bit more like treacle, right? But it turns out there's actually a really easy way to modify that viscosity, and that's to warm the oil up. So we're looking at two different technologies to allow us to recover a good percentage of the oil in place on Finbuley. One is injecting polymer, but at a high temperature, not a
Okay.
crazy high temperature. So we're looking at 200 degrees Fahrenheit, which is just below boiling point. So that's not that difficult a temperature to get to. And the other technology we're looking at is radio frequency heating in production wells. And what do I mean by that? It's like microwaving the oil.
All right.
And what it
Okay.
does is it warms up the oil that's right next to the well. And actually, that's the very best bit of oil to warm up. Because if that oil is like treacle, it really slows the oil getting into the well. The well's, well, it's like this size, you know.
Hmm.
And if it's like treacle, it's really hard to get in. If it's all warmed up, it flows in much, much better.
Yeah.
So uh, we think combining radio frequency heating and warm, hot injectant, you can get a pretty decent recovery factor from this field. And the thing about Finbuley is it's a big field, right?
Right.
So we estimate, Serica, who are our operator on this field, estimate is about 900 million barrels in place. It was drilled in the 70s, right? So it's been half a century in the thinking about how to make this project work. And people were drilling for it because they were drilling for something much deeper. They were drilling for another copy of the Piper and Claymore fields. So Claymore's to one side, Piper's to the other. These are iconic fields in the North Sea. And they could see this big structure at the Piper level, deep in the reservoir. And they drilled it and they found the seal had eroded away. And all the oil that had been going to accumulate there went up to a much shallower horizon where it biodegraded, became heavy oil. So for 50 years, that oil's been saying, I'm too hard to get out. This year, we'll show you how to do it. So I'm really quite excited about Finbuley.
Hmm.
And on that same license, we got another field called the Lowlander field, which is, once again, that was drilled in the 80s. And when Texaco discovered it, they then drilled 4 more wells because they really thought they'd got a good discovery and wanted to move it forward. It's always foundered on the fact it's got a very high H2S content. But we think we've got a solution for that. And we think it's not a massive field. It's kind of 25 million barrels, that kind of figure. And it's 50% shared with Serica. But we think that's another project that can go forward. And then we've got
Okay.
our gas field in the southern North Sea, Earlham field, high CO2. We're trying to develop that with our partners on that field, IPC and MLCP. They're planning to build an offshore power station and with integrated carbon capture. This is actually the perfect gas field for Ed Miliband to approve. Even Ed Miliband will approve this one because we're going to capture all the CO2 and re-inject it back into the reservoir. And then on top of that, we've got a couple of gas prospects in the central North Sea. So we've got lots of options, lots of things to work on, lots of opportunities to create value for shareholders. What's not to like?
It sounds good. It sounds good. Now, obviously, oil and gas companies like yourself, the hardest part is getting finance. Obviously, you've done the deal there on Pilot, which is great. So it's
Yeah,
essentially free carry, and you keep
yeah,
a healthy 18 or so percent interest. That's a great model. Obviously, as a company, you'll probably want to raise money, and I saw that you recently announced that you were looking at potential royalty funding,
yes,
a
yeah.
structure that could include elements of Orcadian's current portfolio. What was the rationale for that? I think I've answered the question, but it'd be nice to actually hear it from the horse's mouth. What was the rationale, and how are discussions progressing on that front?
Yeah. So I'll tell you some facts about trying to raise money on the AIM market for UK the oil and gas sector. So these are just public domain facts. It's just that most people don't go into the analysis of the available files from the London Stock Exchange. So over the period from 2006 to 2022, when Rishi Sunak first introduced EPL, every 3 years, investors in the London Stock Exchange put £500 million into companies to spend on the UKCS. In the 3 years after EPL, so 23, 24, 25, the London Stock Exchange invested £3 million in
Wow.
UKCS oil and gas companies, and we raised half of that.
Wow.
So the AIM market is broken. It's not
It's
fit
been
for
challenging.
purpose.
Yeah.
It
Yeah.
it's there. That's a nice euphemism. It's challenging, right?
Yeah. Yeah.
So we're working with Albion. That's the company we're working with on this
Yeah.
royalty scheme. We're planning to put a series of royalties together based on revenue from these future opportunities. And of course, people will put a risk on this because there's nothing guaranteed there. You know, there's lots of things we think will come on stream, but there's nothing that we can say it's fully financed. It's all the way there. It's three-quarters built, like Rosebank and Jackdaw. Well, they're both almost 90% built. Um, uh, but we want to sell these royalties on a market that Albion's setting up, which is basically uses the blockchain so that you can give little slices of this royalty to individual investors. So we did a fundraise. We did a convertible loan note fundraise just before the end of the year.
Yeah.
We ended up talking to 9 people to raise £500,000. This is going to be more like talking to 9,000 people to get smaller bits of money from those individuals. And it allows us to dilute our interest at the asset level, but not dilute our shareholders in the overall company. So we think it's a great idea. None of us know how well it's going to work because no one's done it before. So we'll find out. But I'll tell you what we decided in the board. We decided that the biggest risk was that I would end up looking stupid. And we all decided, well, the rest of the board decided that was a risk they were prepared to take.
Right. Because they can always boot you out. But I think you're one of the largest shareholders, though, so it might be problematic.
No, they can't boot me out.
No. Unless you vote yourself off. But yeah.
Yes.
Well, yeah.
Very
okay.
good,
I mean, you've got an interesting portfolio that's grown significantly since we last spoken, and the projects have advanced. Such as Pilot. You've got potentially innovative funding solution there. I mean, perhaps lastly, Steve, you can tell investors tell us why you think Orcadian is a good investment proposition.
Well, Orcadian is a great investment proposition because I'd say currently all the UK oil and gas stocks are kind of undervalued because they've been through such a rough time with such a hostile environment. It's not going to be like that in the future. Energy security is going to trump all these concerns about environment and people just liking to bash oil companies because bashing oil companies is what some people get off on, whatever. So that's going to change because energy security will trump all that. And for some reason, the companies with the development projects are not getting valued at all. And the truth is, the only way you can address your energy security issue is by doing new projects. And the companies that happen to have new projects, well, I won't make a list. We have new projects, right? And we've got a good portfolio of them. Now, I don't know why else we might be undervalued. Maybe it's because there's so much of the company owned by management. Maybe that makes for too small a free float. I'm not about to give that up. That's my incentive to make Orcadian a massive success. So we are what we are. We're a great collection of projects in a basin that is going to have a resurgence. And actually, to be honest, the resurgence started in November when the oil and gas price mechanism came into being, and all the companies knew they could make 60% of the profit rather than 22% of the profit on new projects. And it's a shame EPL hasn't gone, but it is what it is. And we know it's going to go the end of 1Q 2030.
Yeah, it does sound like things are going to change, and even if this government that we've got at the moment don't realise it or do something about it before the 2030 deadline, then I'm sure the incoming government will actually do something about it.
Yes.
So
Yes.
yeah, I mean it's a travesty really that and Trump will say this as well, but it's a travesty that we've got this fantastic resource in the North Sea, and we're not utilising it. We're not,
Yeah.
and the cost to our economy from the loss of jobs, and it's a self-fulfilling prophecy in a way, because if you start putting an energy profits levy on oil and gas companies that then just decide they're not going to actually produce any oil and gas,
Yeah.
right?
Exactly.
The taxes they would have made have now gone,
Yes.
including the EPL. So
Yeah.
it seems like a bit of a, I'm going to use this word, and it's not very professional, a dumbass decision.
Yes. No, I absolutely. Increasing the tax rate to such a high level really just stop the companies who are making money in the North Sea at the moment, the producing companies, from investing in development opportunities. The only companies that have been looking after these potential in development opportunities are companies like ourselves, right?
And that investment is future tax, isn't it?
And
That's
it's all future taxes. And it's inevitable. This is a mature basin. I always say that our strategy is to have great rocks in the reservoir, and we don't mind difficult fluids. And someone might say, well, why didn't you have great rocks and great fluids? I say all those development opportunities have gone already, right? Because they were easy, they were straightforward. The ones that are left are a bit more challenging, a bit more difficult. You have to be a bit more innovative. And that's what we're trying to be. And that's what we want. We want the currently producing companies to come to us to take advantage of these opportunities.
Okay, well, Steve, look, great to chat again.
Yeah, lovely to see you again.
Yeah, and nice to hear your thoughts on the oil market. Obviously, we'll keep watching what's going on there. And we'll look out for news flow from yourself, and hopefully get to talk again.
Very good. I look forward to it, Darren. Thank you very much indeed.